Good evening all and welcome to this webinar on Introduction to Volume Profiles. Today we have with us Abhishek, popularly known as Killer Trader in the social media. He has been using the volume profile and order flow techniques in his intraday and positional trading, and he has developed few indicators based on volume profile and is using them in his day-to-day trading. At Quantower, we have integrated these indicators and are now available to his mentor traders. Those who would like to explore more about these indicators can reach Abhishek via his Telegram channel, The Killer Trader. I'm sure this webinar will help us in learning about volume profiles and how it helps us in understanding the market structure. With this brief introduction, I would like to hand over this space to Abhishek.
Good evening,
Abhishek?
everyone. Good evening, everyone. Hi, Roshan. Thanks for the introduction. I hope everyone is able to hear my voice clearly. Uh,
Yes, yeah, we can hear you, Abhishek.
Roshan, could you please enable the participant screen sharing since it says that
Oh,
host is
okay,
present?
okay, sorry. Yeah, you can do that now. Yeah.
I hope everyone is able to see my screen now. Listen to my voice clearly. Hello, all. Thank you for joining this webinar. This is an introductory webinar on volumes, use of volume profile, and how to build an understanding of the market context using volumes. All the information shared in this webinar is only for your educational purposes and should not be misconstrued as financial advice. Please consult a registered financial advisor before you make investments in the markets. This is the agenda of today's webinar. There are a fefew topics that we'll be discussing, including why exactly volumes, what made me start analyzing volumes and uh, volume profile, and the primary uses of volume profile, how to use volume profile to build a strong understanding of the market structure, and a few other specifics of it. Now, volumes, when it comes to short-term trading or long-term trading, volumes is one of the singularly most important aspects that a trader has to track, because it's volumes is what drives the markets. Actually, volumes is what shows the interest of market participants in the markets, be it in a stock or in an index. When we talk about short-term trading, when we talk about a weekly trading or intraday trading, especially in the derivatives market, volume plays an even more important role, since especially in FNO market, we just don't have the futures market, we also have the options market. With the introduction of short-term expiration contracts, like the weekly expiries that we trade, even the volumes play a very important role and help a trader in tracking the short-term moves of the markets, because these players are the ones who are building positions from an expiry to expiry basis, are the ones who would try to drive the markets to a large extent. Now, when I talk about volumes, we have a vertical volume and a horizontal volume. Like, for example, when I talk about vertical volume, we have the volume indicator, for example, that can be plotted on a time basis. That is any time frame that you specify here, a 5-minute time frame or a 15 minutes time frame. This indicator basically shows volume, but the information that this particular tool gives is rather incomplete, because ultimately we all trade price, and the indicator, the volume tool doesn't actually show volumes based on price, but it only shows volumes based on time. On the other hand, volume profile is a tool that basically talks about volumes at price on various time periods. That entirely depends upon a trader's discretion and requirement. But when you go to step profile in Quantower, and this is the session profile that I'm using, when I'm using the buy sell volume, you have a variety of options here. The ones I primarily use are volume and buy sell volume. When you use when you enable the volume profile on a daily basis, it essentially shows the volumes that are being transacted or at every price point on a daily basis. In this case, these are my session profiles. Now, why exactly is this volume important for me? What exactly does this information tell me? Does it give me buy sell signals, or does it tell me something about the markets? One, volume profile by itself is not an indicator. It is just a tool. It is a tool that gives you certain real-time market generated information in the form of volumes. It tells you where exactly are the highest volumes traded on a particular day. What is the area where lower volumes are traded on a particular day? Now, how to make use of this particular information to help a trader in giving them an edge when it comes to execution, or to understand what exactly is happening in the markets, depends on the trader themselves. And for that, there are certain building blocks, there are certain rules that I follow, which we'll be discussing further in this webinar. My usual style of explanation, I'd rather like to have a look at the questions and see if some certain questions need to be answered then and there itself. So if at all you have any questions, please feel free to put them in the chat, and I will answer them either during the course of my explanation or at the end of the session. Now, when we talk about a basic understanding of the markets, before we move ahead, I'd like to discuss a couple of basic pointers of volume profile itself, because we have quite a few participants who are rather new to the entire volume analysis. This is this is the volume profile on a daily basis, essentially showing me volumes traded at every price point on a particular day. You can see that some of the areas are light in color and some of the areas in are dark in color. When we talk about volume profile as a whole, it has a few structural components to it, namely value area, point of control, and outside value area. Essentially, value area, the darker shaded aspect that you can see that this particular part of the volumes that you can see are darkly shaded but not light. This essentially is the area where the highest volumes on this particular day was traded, that is on 9th of January. So out of the entire range of yesterday, if you see, this is your high of yesterday and this is the low of yesterday. So within the entire price actions range, this is that particular zone where the highest volumes were traded yesterday, called as your value area. By default, the value area is 68% of the highest volumes. Why exactly 68%? It again comes down to Bell's theory of distributions. 68% is one standard deviation to the mean. Basically, you can look more about it in Google. So this particular chunk, this particular location is where 68% of the highest volumes were transacted yesterday in Nifty futures. Apart from that, you also have other ranges, other areas of the profile as well, which are called as outside value areas, or areas where lower volumes were basically transacted. And right inside your value area, you have a particular price point. You can see that a certain price point is highlighted in yellow. This is called as your point of control. Point of control basically is nothing but that single price point where highest volumes were traded in that particular session. Since this is a session profile, this is an intraday profile, point of control talks about that single price point where highest volumes were traded. In this case, for example, to keep it a little precise, 18 178 179 was where highest volumes, single price point where the largest volumes were traded yesterday. Now, this information is being generated by the markets on a daily basis, on a weekly basis, on a monthly basis, however a trader wishes to use it and see it. This information can be used by a trader to improve their trading, to find those sweet spots for entry and exit, to understand what exactly is happening in the markets. Because the first and the foremost step of profitable trading is to understand the market context in which you are trading. What kind of markets are we trading? Because that is where you start to if you understand the kind of markets we are trading, you will be setting expectations accordingly. And if you set expectations accordingly, you can also execute your trades accordingly, because you can't expect the same kind of moves in every day, day in and day out over a large period of time. You can't expect markets to move every day the way markets move today, or you can't expect markets to be range bound throughout the year. That is where the primary use of volume profile comes into picture. The first step in understanding the various structures of markets using volume profile is to look at the daily profiles and the structure of the daily profiles. You can see that in yesterday's case, let's take the more recent days as an example. In yesterday's case, this is where your value area was, and if you look at today, this is where your value area is, and again day before yesterday, value area is at a different place. The value area of a volume profile is never constant on every day. Depending on the price movement and price volumes flow that is coming into the markets, value area will either be at the extreme range of a upside or downside or in the middle, for example. Based on where exactly value was formed for a particular day and the closing price of an instrument on that day, you can already set certain expectations, or you can already make a trading plan for the next day based on the kind of opening we get. Now, two important things with respect to using volume profile to do your analysis is one, the closing of previous day and open of current day. Of course, we will not be knowing about the open of current day, for example, open of tomorrow until the pre-market is done. But that doesn't mean that we can't already do our homework with respect to the closing of the previous day plus the volume distribution structure. Based on whether we open tomorrow inside today's range or outside today's range, we can take appropriate trading decisions at the open of the markets. For example, if you look at today's case, we had a down move, and we had a down move. The markets were trending strongly to the downside today, and you can see that a large part of the volumes were traded towards the lows. When you see that a large part of volumes are traded to the lows on a down day, and the markets are closing to the lower end, basically. For example, this is the value area for today. This is the entire range for today. You can see that we were downtrending and the value was towards the lower end, and the closing was also somewhere in between your value area. Whenever you see such a particular structure of volume profile on a particular day at closing, and the closing price around, let's say, between 315 to 330, you see that prices are trading to the lower end of that particular day. That is a very good indication that the current day's trend is likely to continue for tomorrow. That is, in this case, you can see that the day was trending down and value is to the lower side. The only difference is that the closing is somewhere in the middle of your value area, but not towards the lower end. Say if at all the closing was to the lower end, then that is a very good indication uh, for you that there is a good chance of market continuing its direction for the next day as well. That is a downtrending markets. Now, how can you use this information? Again, depends on you as a trader. If you are a trend follower, if you are a directional trader who's, say, short and nifty futures from the morning, then they can make a decision to carry forward their positions home with a hedge. Or let's say that you are an option seller, you can take a different kind of action there. It basically helps each and every trader based on their own trading style. In this case, if you see, the closing is somewhere in the middle, that middle of the value area, which implies that there is enough value at the lows that pushed prices up. The most important point, folks, as I said, is to not just look at the shape of your profile, but apart from the shape of the profile, also the closing price. The structure of the profile and the close is very important. For example, in this case, if you see, We had a similar kind of structure on Friday as well. Again, the closing was somewhere in the middle of your profile, especially in Nifty. So in this case, again, it was not a very good decision to carry home positional shorts, because whenever you see a down day and value being formed at the lower range, then as a directional trader, I'm just talking about directional traders here. Uh, y- you would rather expect, you would rather uh, you know uh, feel that the best situation for you to carry a positional short home, a short trade home, would be closing at least below your point of control, at least towards the lower range of the value. Until then, it is rather better to cut your positions there, if at all you see such a structure coming up. This is one of those examples where the price and volume structure are both in almost the same direction. In some cases, or in a lot of cases, we also have a price volume structure in a different direction. For example, we'll look at a couple more examples of that. For example, this particular day, you can see that the value is towards the lower end of the day's range, but the closing was somewhere towards the high. In the earlier cases, we saw the closing was somewhere in the middle or inside value area. In this case, we saw that the value is at one end of the range, and the closing is some to the opposite end of the range. So these are the kind of days where you should never ever carry a long position home overnight. Sure, this is one day where you had a good gap up opening, that's fine. But usually whenever you see such a structure of uh, price volume relationship where value is towards one end and the closing is towards the other end, then that's not an ideal day for you to carry home any sort of overnight positions. And by any positions, I mean you can neither be long or short. You can't be long because value is towards the lower end and price is towards one side. Simply put, when the largest interest is towards the lower end and the closing is to the upside, then even if there was any kind of opening against your position, these players would simply have initiative to stop any kind of a down move from here. So that is why you don't carry a long position. Now, why don't you carry a short position? Because simply put, we are closing around the highs. This 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 rather tells you that never go against price. When price and volume are not pointing at in the same direction, then as a volume based trader, I'd rather like to wait for the appropriate opportunity to pick a trade rather than to go against price or against volume. The opposite end of the spectrum of a lower range value is a value towards the upper range. Again, based on where the closing price is, this strongly indicates to you if the current demand in the market is a weak one or a strong one. For example, in this case, you can see that the value is towards the upper end of the range and the closing at here is to outside your value area in the opposite direction. Again, this is not the kind of a day where you would be carrying shorts. If you want to carry shorts, you would rather see a closing and a value towards the lower range of the day. If you want to carry longs, you would rather prefer seeing a market where the closing is towards the upper range plus value formed for that day is also towards the upper range of the day, and not an ideal situation where price and volume are pointing in opposite directions, to be precise. Does anyone have any questions?
Case you want to say. There are no questions asked so far,
All right.
other than a couple of questions on the chat. So, as today Bank Nifty was bearish, is there a way to look at the volume profile to know the next day move? That is one question. Is there any free tool available to see volume profile? That we will answer later. Okay.
Sure. So I'll address the question in some time once I finish another aspect. So on a B profile, if closing is at extreme, don't carry any positions. If the closing is on the opposite extreme of the B profile, Chirag, then it's ideal that a trader, it's ideally not recommended to carry any positions home. Its importance on a daily chart, we'll look at that. Our volume can also be manipulated. I'm not sure if that's a question or if there is a statement in it. Now, in some cases you can see that the profile is a balanced one. By a balanced one, you would see that the profile is in the middle of the day's range. So when you see such a structural profile coming in, again, this is not the kind of a day where you want to open new positions for the next day, but rather it has certain implications for next day's intraday trading, which we'll discuss in a couple of minutes. When it comes to intraday trading using volume profiles, or be it any volume based tool that a trader uses, I have learned this the hard way, that if you are a day trader, then don't give too much importance to the intraday, the current day uh, volume profile, but rather the previous day's volume profile. If you want to do weekly analysis, then let's say on a Monday, you should be giving more importance to the previous week's volume profile than to the current week's volume profile. Because let's talk about intraday, for example. Let's say the market open today at 9:15, and you see that this is where initially value was. Would you give more importance to a value that has formed on the initial 15 minutes, 30 minutes of today's trading, versus value of the previous day, the entire day's session there? As a day trader, if you look at the developing aspects of volume profile to to take trades on an intraday basis and give it excessive importance over uh, values that are already established in the markets, then you may find that the results of using volume profile will not be quite to the liking. I personally like to see how exactly did the profile form for the previous day, and are we opening on the current day inside previous day's value area or outside previous day's value area. Apart from that, I also look at the structure of my weekly profile to help me understand what kind of moves did we have last week, and if we are still trading within previous week's value area or not. Let's have a look at the weekly profile structure. So the first step would be, one can even use the monthly profile structure. That is completely fine. If at all you are looking at large ranges, it totally comes down to which time frame you trade as a trader. So this is my weekly profile. Still loading, let it finish. So this is your previous week's profile and this is your current week's profile. So at the start of every week, what I do is I have a holistic view at the kind of volumes that came in the last week and the kind of profile structure we made. If you see that the last week's closing was towards the lower end of the week's range, implying that we had a strong case of distribution throughout last week with value also forming towards the lower end of the range. Only the extreme lower end did not have value. We'll talk about the implications of the extreme and not having value in some time. So this is so first step, as I said, is looking at last week. The consensus, the conclusion when we do our end of the week analysis is that we saw a distribution, the strong selling in coming throughout the week with value also at the lower end of the range, with price closing inside range. So for the current week, when you see that you do this exercise once a week, that is fine. You need not plot it on a daily basis. Change it to 1 month. So coming to Monday, you also saw that on Friday there was a strong selling with value being established in the lower end. So on Monday, we opened right above our Friday's value area high, plus also the point of control of the previous week. Now look at this in this terms. Whatever happens in the markets, as all of you know, doesn't have a total certainty. But if you are an informed trader, you will just not look with a bias towards the decision or what exactly the tools that are telling you. You'll not have a hard and fast bias at it, but also have something called as a counterparty effect. Now, what does technically or at the end of Friday's closing, the week's closing, what did the markets tell us? It told us that on Friday, this is a range where there was strong selling, plus the previous week saw some good distributions. This is your previous week's POC and this is your value area low. Now, on Monday, the markets opened with a gap up above these references. So if there are a lot of shorts that were loaded here that had built positions, if market opens against those players' positions, what will these guys do? They will ideally be exiting their positions. So even if you are one of those traders who had carried short trades at closing of Friday, when we had a closing in the middle, that's still fine. If you know the exact location, the point where you need to flip your positions, where you need to exit, because you have a strong understanding of the market context, you have a strong understanding of the volume that's flowing in the markets, then on a net to net basis, it is very difficult for you to be in a loss. So even if someone was short here, the moment we saw that price had opened above our previous week's point of control, above the previous day's value area high, essentially, what does that tell you? It tells you that longs are coming into the markets, and it's not just longs are coming into the markets. These loaded shorts, the late shorts who crowded on Friday towards the lower end of the range, would now need to exit their positions, and their exit itself can trigger a good up move. Ideally, to the upper range, the target of that up move, since we are still trading within previous week's range, would have been the previous week's value area high. But we did not go till there. Still, considering this particular play on an intraday basis where we opened above the two import crucial ranges, this is a trade that would have netted a trader at least 1 is to 2, 1 is to 3 in terms of risk reward, if they understood the context of the markets in which we are trading. Any questions? I still see a few questions.
There are lots of questions. Would you like me to
Sure,
ask those questions, or you will?
we'll have a look at Bank Nifty and then I'll address those questions.
Okay.
All right. So even in case of Bank Nifty, if you plot your previous week's value area high, low point of control, and previous day's value area high, and see, then you can see that even in case of Bank Nifty, this is the location where we opened, and once we saw price acceptance above this area, above previous day's value area high, then it was a good long-sided trade. Now, the key to using this kind of information, as I said, is to the first step is to understand market structure. Now, if you understood market structure on Monday, seeing that we are trading above Friday's value area high, then the initial context or the bias in the mind would be towards the long side, but not towards the short side, since there is a higher probability of longs taking the markets up. Now, when you talk about the same thing for today's market, because contrary to yesterday's move, contrary to the strong pullback that we had, especially in the second half, today's price action was totally on the opposite direction. So, how do you actually gauge or expect these kind of moves to come into the markets? This is why I said that you need to have your important references marked not just on daily basis but on weekly and monthly basis if you carry home your positions. Because as day traders, as a particular time frame traders, we have a tendency to dial down a lot into it and just look at that particular time frame. But just because you and me, we are intraday traders, doesn't mean that everyone is an intraday trader. There are traders who trade on larger time frames, and these big traders, they are the ones who actually make start or end trends essentially. If you see on Friday, when you look at Bank Nifty, if you're a Nifty bank trader, you saw that the closing was in the middle of value area. Is it a total lower range value that you saw in Bank Nifty? In Nifty, you saw that the value extended till the lows, but in case of Bank Nifty, you saw that the value did not extend to the lows of Friday, and then we saw a pullback. We are currently in a downtrending markets, which is clear. But the fact that we pulled back from a certain location without value being formed there tells you that these lows are where low volumes pullback, but not a high volume pullback from a price perspective. I'm not talking about the traditional volume indicator, but a volume profile. The fact that we pulled back from a certain location and there was a lack of value there on a session profile basis tells you that this pullback did not occur on higher interest of large players essentially, which is one of the reasons why I was stressing on the fact that in case of these kind of value formations that you see, this was something we were discussing yesterday, that in case of such a value formation that you see, one should not be too eager to change their bias for the short term trend immediately, because this is where the pullback initially started and there is no value. A retest of this area would tell you whether bulls are actually having the intent to defend this location, to defend the first area of price where they absorbed the selling initially. And that is what happened today. We saw a retest again. Frankly, I was expecting this sometime till the current week's expiry, but this happened today. So going forward now, if you see interestingly again, even this time the formation of value, if you see to the extreme lows, there is no value. Value again is somewhere a little bit to the upside, but still better than the kind of value formation, the price value relationship that we saw on 6th. Today it's slightly better compared to uh, Friday. So now, because the value is slightly better, we did see a little bit of substantial volumes coming in today at the lows. So tomorrow, if at all we start moving, if we start moving above 43, 360, 370, if there is price acceptance above 43, 360 and 370, then this will be a good place to go long, because again this is an area where bulls would start showing interest, and since this is where the highest volumes were traded today, then all the late shots would need to run for cover then. But if we break the lows again, then it's simply a case of trend continuation, because this is second time we tested this location. Again, we are starting to see indications of value being formed, interest of participants coming in at this particular location. So if this price location, if the ground is held, then this is a good place for a trader. Once 42, 360, 370 is broken to the upside, a trader can get good long trades on an intraday basis. And if you compare Nifty with Bank Nifty's chart, in case of Nifty, the lows of sixth had value established. You can see that the value area is still the lower end, and which implies certain interest of participants, as I said. But in Bank Nifty, that is not the case. So you can see that the lows of Friday were broken in Bank Nifty, but not in Nifty. So using keeping both Nifty and Bank Nifty charts on a side by side basis, looking at how value has come into the market, looking at how the volume distribution is taking place into the markets, you can also have a rough idea of understanding of whether you can expect one index to be stronger or weaker than the other one. Now, let me take a few questions. Do you have any questions? I think there are
Uh,
just
sh- yeah, I will read for you because there are some questions on the chat as well as in the question answers.
sure, sure.
So I will read from the chat first. Okay, so the first question is from Chirag Kabani. So on B profile, if closing at extreme, don't carry positions. If closing in between POC or profile, carry positions. I don't know whether it's a question or an answer, but if you could, I think that's what you already explained. Maybe that's
Yes,
the,
yes.
yeah. Okay, he's highlighting the things that you told already. Jashwant Singh is asking its importance on daily chart. So if you could answer that, I assume that he's talking about maybe whether it is good to look at daily charts or maybe intraday charts. So
Jashwant, that entirely depends on which time frame you trade. If you are looking at daily charts, if you are looking at 1 day candles, then you would ideally not use the session profiles. Since session profiles is for intraday traders, you can go with a weekly profile or a monthly profile if you are looking to if you are looking to understand the market context and the market bias on a larger time frame.
okay, so there's a question from another Abhishek here. Volume can also be manipulated.
Now,
Uh,
what
I,
what exactly
no,
is manipulation? Because the whole job of markets is to manipulate. There is nothing like a clean and clear manipulation happening, but it's the job of markets to take money from certain people and put it in the pockets of other people. That is what happens on a daily basis here. So it can't be called manipulation.
yeah, but if you just look at the total volume, probably that may give him a wrong picture because total volume can be entire volume traded. That's where I think what
Definitely.
you're looking at, the buy sell volume will give much better idea about where exactly the buying and selling is happening. Maybe that is something that you could highlight a little bit about why you
Definitely.
probably watch
Definitely.
the buy sell volume rather than the total volume. So
See, the buy sell volume is just for a trader to take a couple of steps back and see if a large buying or large selling occurred at any particular areas as per volume profile. Again, whether a trader uses the total volume profile or the buy sell volume profile, the information volume profile actually gives a trader is the same. It highlights the price volume structure. It highlights where is large volume coming in. It highlights whether a move is weak or strong based on the value formation. Now, what kind of understanding that a trader takes from it entirely depends on their understanding of concepts relating to volumes and to a certain extent auction market theory there. because the volume profile essentially gives everyone the same information. And as I said, let's say if there is a b-shaped profile, like for example on Friday you saw a b-shaped profile, which implied that a lot of selling had come in at the lower range, but market gapped up on Monday. So does it imply that volumes on Friday were manipulated to invite everyone into shorts? No, everyone who put on a short trade there on Friday here had to exit. To a certain extent, the late shorts who came in at the lower end had to exit. Now, if you as a trader know what to expect when things go against a particular volume profile concept, then you can know what exactly to do.
Okay, so there is a question from VJ. Please say how to plot this indicator once again. I think we will take this later. There is a question from Paul Philip. Kindly show where the entry, exit, and which strike price to take. So again, if you could highlight that.
See, it again depends on what the gentleman Paul rates. Is he an option writer or an option buyer? Because if you start getting into the entire depth of entries, exits, strike selection to choose, again we would need to discuss on what day it is, how close we are to expiry, and things like that. So it's better if we keep that towards the end. I can answer the last couple of questions on that if time permits.
Okay. Yeah. Do you compare session volume profile to weekly, monthly profile to take directional decision?
To an extent, yes, I do, especially the weekly profile. Since we are all short-term traders, I mainly trade on an intraday basis, and on a weekly expiry basis, I use weekly profile and previous day's profile largely to see where my important reference areas are.
Okay. So there is a question from Dipali on 9th Jan, both volume analysis and closing price. I think volume price is higher end of the day's range. So you could have carried longs as per you. So that's a question from
No,
Dipali.
again, value establishment is not towards the extreme end of the day structure. You could still see that a certain amount of highs which formed at the upper end did not essentially have value on it. Also, apart from that, you also need to see, for example, the weekly profile structure and the monthly profile structure. Right now, currently we are in a downtrend. The bare minimum for a trader to carry home positions opposite side of the trend would be a close above the previous 2-day high. That is, let's say that if I want to carry a long position on 9th, then the bare minimum criteria for me to take a trade against the opposite direction of the trend would be above the high of 5th, at least around closing time. If market is above 43,300, then it is ideal for me to carry home longs.
Okay, so the question from Shashank Singh, do you think trading just based on volume profile might not give that result, which it will give along with the order flow for intraday purpose?
Order flow is just a tool for secondary confirmation. Order flow basically gives you a second set of eyes into what exactly you are seeing the real time supply and demand into the markets. But where exactly you need to look for supply, where exactly you need to look for demand, and if something opposite to that is happening, it depends on a trader's understanding of volume profile concepts mainly. Sure, it can
Okay.
give certain bit of added value using order flow on volume profile. That's for sure. Even I use order flow, but having a strong understanding of volume profile and volume structures can take a trader a long way, even without order flow.
Okay, so there are some questions on KT delta band, which we'll answer later. So Kumar is asking, please explain today's trade process. Maybe if you can
Sure.
explain, I think once again, maybe I think you already done that, but you can do that once again.
So these were the references that I had on my chart. This is an ABWAP starting from sixth essentially. By default, it's on sixth. Why exactly sixth? Again, I will answer that to the end. I use a vWAP on a different way. Let's say it's starting from Tuesday because I'm more active in the options market from Tuesday. This is my previous week's value area low, and this is my previous month's value area low that I have plotted on Bank Nifty. This is a location where we saw that the price movement halted in yesterday's up move and the closing as well. So when we saw that, we at open right itself we had a uh, drive down lower. We had a price action that confirmed that market was moving lower in the first opening 5 minutes. Considering that we have uh, higher time frame references, and this move confirms the rejection. This is my location where I put on a short trade, and the only job I did was to trail because on a higher time frame the context was very clear for Bank Nifty. Let me turn on intraday profiles. Lesser volume. On a higher time frame, as I shared some time back, the context was very clear. You could see that during this up move there isn't any value at lows, indicating these lows are weak lows. So I was expecting a test of it somewhere during the week, at least till expiry. Plus we have resistance to the top side, a higher time frame reference as per volume profile. When we opened below that, this was a clean shot. Plus the first within the first 10 minutes of price action itself, we took out previous day's value area low. So the initial reference was previous day's low, and from there the initial swing low.
Okay,
Next question.
so yeah, there is a question. If many people start using volume profile, then don't you think it might lose its edge?
And there are two parts to this answer. First thing, as I said, volume profile is not a tool. Volume profile is not an indicator. It doesn't give you buy or sell signal like, let's say, super trend, for example. This is a tool that gives you volume information. Again, how a trader uses it entirely depends on the trader's understanding of markets plus the trader's market experience. The 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 level of the depth perception with respect to volumes I had, let us say, 3 years back was way different to the depth perception which I visualize looking at volumes now. So that is one thing there. Second thing, anything that is based on strong logic of markets, we are essentially tracking volumes of uh, the crowd here, volumes of large participants here. Do you think they will go against their own
Mhm.
positions there just because a lot of people are using it? No. As long as something has a strong logic backed into it, as long as any technical analysis that your concept you are using has a strong logic, the key is strong logic backed into it, then you can use it for a longer duration of time in the markets. If that is simply or mindlessly selling something at a certain point of time in the day without with total disregard to market direction and the volatility conditions, then more often than not things like that will go south. Since we are looking at the core driving force of the markets, which is volumes, a trader can use it happily and comfortably.
Okay, so there's a question. Let's say we had a whole week sideways price action week, then what one should perceive from that sort of weekly volume profile?
If we had a whole range of sideways week, let's see if we can plot that. Let's look at Nifty, because Nifty we did see we did have certain sideways market range in the month of November here, for example. Let's use weekly profiles since we are looking at a larger price range. So if we look at the range of November, let's say for 3 to 4 weeks, to a large extent, we had sideways market. And this is my weekly profile that I have plotted. At every point of time, see where exactly are we closing, looking using the concepts. Uh, Roshan, there is some echo in the background. For example, if you look at this week, we
Okay,
had
so there are few more questions here.
a weekly value established to the upper range, closing again to the lower range. So this is not the kind of a market where you would want to take a short-sided trade, since sell side shorts are not showing enough intent that value is driven down lower here. So if you look at such cases, then you will understand that even though the week was in a sideways range, value has formed at a certain end of the range. Using that, you can make trading decisions. If the week is sideways and the value is also in the middle of the range, then that is a week where I would rather wait for my weekly high or weekly low to be taken out before I enter a trade in the next week.
Okay, so there is a question from there is no name clearly, but he's asking, I am looking at market profile and volume profile POC. They appear to be same. Can you explain?
I
Yeah, this
don't
is
I don't
yeah.
use market profile. I only use volume profile. The main difference between market and volume profile is that market profile works on the concept of time and volume profile works on the concept of volume. And again, there is no right answer whether volume profile is better or market profile is better. It comes down to a trader's preference there. I personally, I am more inclined towards volume profile. Everything that I need is given to me by volume profile, so I don't look at market profile.
Yeah, but there is it's also true that most of the time market profile and volume profile POCs are almost the same unless we see some kind of a sharp move. I mean,
True.
and like at a late end of the session or something like that. Otherwise, most of the time, the value area will be created. It will be almost similar for volume as well as price, and the POC also will be in the same range. So that's what happens in most of the sessions.
True, because market profile POC depends on the point where market spent the largest time, and if market spent the largest amount of time at a particular point, more often than not, you can also expect a larger amount of volume at that point.
Correct, correct. Uh, so why do you prefer volume profile over market profile? I think you already answered that briefly.
Yes.
Uh, so your weekly profile starts from Friday to Thursday or Monday to Friday.
Weekly profile would be standard, the calendar week that I use. The anchored vWAP that I use it from Friday. Again, anchored vWAP is just one point out of many points that I use for my analysis. It is not the only one, because not every technical analysis parameter can give you answer in every market condition or for every question that you have. I more often than not start using anchored vWAP from Friday to Thursday, because that's our weekly expiry cycle. I start using it mostly from Tuesday or Wednesday, because in case of sharp reversals, then it helps me understand what's the average price of the previous directional players, and where exactly above which point is there a likely chance of them getting into deep trouble, so that I can also time my trades with that, because the covering move itself can give very good results.
Okay, so there is a question. Okay, okay. So how do you plot anchored volume VWAP? In Quantower, it's called custom vWAP. It's at the bottom. Maybe you can just show where exactly it is. So
So
maybe
this
you
is
can.
your custom vWAP, and you choose the starting point where you need to see it from, and from starting point it gets plotted to the most to the current market price essentially. You also have an
Okay.
option to change it to look at the average price. For example, instead of going for anchored, you can click at custom and say you want to know the average price, average VPO, volume by weighted average price traded, let's say in the month of December. Then you can choose December 1 to December 12. Then it becomes a custom VWAP, but not anchored one.
Okay. So that is clear. Okay. Okay. So do you look at previous week profile or current week profile for decisions? I think you already explained that. Um,
Can we
do
have
you
volume?
recommend?
Sorry,
Yeah.
please continue. Sorry.
Yeah. Do you recommend to track options data?
Again, I personally uh, do not track a lot of options data. In certain instances, I use option surface because I also have my own indicators coded that tells me about aggressive writing in a particular strike. I rather look at option chart using those tools, but not the general options data.
Okay. So there is a question from Shahid Kumar. If interest in Nifty is on lower end, then why not pull deeper again, or vice versa in Bank Nifty?
I didn't get the question.
Maybe saying that, I mean, if you could show both the charts side by side, if it is possible, maybe he's looking at something.
Yes, I think if he'll rephrase his question, then I can understand better. He's talking
Okay,
why
he
is
says if interest in Nifty is at the lower end, then
yeah.
why not pull deeper again? So he probably saying that if the market is closing at the lower end, why
Mhm.
not the market will go lower, further lower, I think. So the issue here is probably that, I mean, we found some support today at some level, right? And
Yeah,
it is at the previous week's data point. So I think if that is a key support for the market. If that can hold, probably we can see upside. So
true. See, when there
mm,
is value to the lower end, ideally we will expect that the markets will continue to move over the next day. But again, as you know, there is no 100% guarantee for that, since open of the market depends on a lot of factors that also happen on an overnight basis. Trust me when I say this, there is absolutely no indicator or tool that can forecast the opening of next day's market day in and day out consistently, because open depends on a lot of parameters beyond the purview of technical analysis there. So what happens after open, to a large extent previous day's technical analysis dictates that. So in this case, on the case of 6th, on 9th, ideally a lower open is what would happen in the usual circumstances, but we had a higher open. But if you know what to look in a chart using volume profile, you would understand that this is where shorts are present, and they would now need to pack up.
yeah, so ideally what happens is that if the market where the market opens depends on what the other people are going to do who took overnight positions, right? So that is what we need to understand first. And
In
that's why the plotting those data points becomes very important for the next day's opening. So if you
True.
see the market is opening much above the value area, you can be sure that those who enter the market during at the value area will try to uh, do the covering of the positions. So that is
Correct.
where it will add up to the existing covering as well as the new buying that or buying or
New
selling that
new
is
buying
happening.
that came in here.
Yeah.
Correct.
So yeah, okay. So that is, if at all I've missed anything, yeah, I think there
Okay.
are a couple of more questions.
Can we have volume profile week start from Friday to Monday? By default, the step profile feature functions on the calendar week, but not our one Indian expiry week. If you want to plot a certain profile from Friday to Monday, I personally don't do it. I use it from Monday to Friday. You can always use custom profile and plot.
Yeah, that option is already available, so you
Yes.
can do that. So, uh, okay, can you discuss importance of high value nodes and low value nodes?
High volume node and low volume
Yeah,
node.
basically volume. I guess Dipali means it's volume and high volume and low volume nodes.
Okay, the textbook concept of high volume and low volume areas tells you that market travels from a high volume area to low volume area, and in especially in low volume areas, you see that the movement of price would be very quick and in a flash, since there is basically lower liquidity there, and from there it will keep on moving in that behavior until market finds the next high volume area. If you It is ideal to look at high volume nodes or using, if you are a user of composite profiles, for example. So this is your composite profile. You can see that certain elements or certain price locations in the chart. This is for the entire price range. You can see that certain areas have very less volumes. For example, this one. You can see that this particular location has is a low volume node, where come look at the volume bars on the previous locations and this one, and you can see how the movement of price has been in this place, and from there until it is going to the next area where there is a higher volume, you can see that the higher pace of the movement is actually continuing here.
Okay, so there is a question: do you combine volume profile and order flow on trading?
Yes, I do.
Okay, so another question is the question from Sashank. This question can be totally ridiculous, but do you think large buyer or seller has the ability to move? I mean, the price moves because of liquidity, not because of single large order. Then how a large buyer or seller plays, how they ensure liquidity comes in, and are we part of that?
Okay. See, there are always two aspects to a trading move. First one is building a position, be it any large participant. There is no one single large participants. There are multiple large participants. There are multiple large players in the markets, and it's not always needed that all of them will be on the same side. Everyone has their own perceptions of the market. Everyone has their own plans with respect to trades in the market. So the first step is to build a position, and the second step is to attempt a drive. Now, when we talk about building a position, this happens using limit orders. Large orders are cut down into smaller orders and are executed in a certain price range where any participant, any large player builds their position. Once they finish building their position, that is when they use market orders to try and drive price in the direction of their position. If someone is building a net long position, they will use aggressive market order longs to drive prices towards the upside. Again, the key word here is try, because not every time a participant will be successful. For example, here certain players try to drive the markets to the upside, but we do have sellers on a higher time frame at this particular point. So what did they do? They again push the prices down. Now what will this guy do once price starts moving below their location? They will eventually need to unwind their positions. This is how basically trends start when a certain participant builds a position and drives the price in that direction. Then some other participant looks at that position and also jumps into the move. It goes on until it reaches a certain price point where there are opposite parties sitting. This is what on a holistic basis that volume profile helps you understand. And this is how the first key is to differentiate between building a position and driving the markets. And this is where even you can look at order flow on an intraday basis to help you understand.
Okay, so I think there are no more questions. Maybe one question that we wanted to keep it at last is about the delta band and couple of indicators that you have. So maybe you can highlight that.
Right, just a second, folks. So when I hope that to a large extent the contents of this webinar was informative and educative to you all. When I talk about continuing education and learning with respect to volume profile, especially the roadmap ahead, I conduct a mentorship program called as a professional traders program, where I teach in depth about use of volume profiles, various kinds of volume profiles, concepts of volumes, and order flow trading. Even when it comes to order flow trading, I talk about how to use order flow at certain locations, certain techniques like extreme delta reversal, how to use the time and sales for additional confirmation at certain price points. Apart from that, I have designed and developed certain proprietary indicators uh, that work on a functionality of volume profile and order flow. One of them is delta bands. As the name suggests, delta bands essentially tells me where exactly are the large participants in a particular session trading, where exactly do they have their positions built. And this is not a constant indicator. Depending on the positions that are being built by large players during the day, the the band location shifts and gives me an indication of what is happening. For example, this is the delta band for today. Every time the band is plotted, it is only applicable for the current day, even though it starts a couple of hours before. So this is a band for today. This is where the largest orders of the day had come in. This is where the biggest participants aggressively sold into the markets today. And that's what the band indicated, that it is a sell side bias for the day until either band comes down and price moves up, or if price breaks through the other side of the band. Essentially at open we started breaking down through it, implying that sellers are putting a lot more aggression in this index compared to the longs. This is one of the indicators that I use for my intraday trading, helping which helps me stay on the right side of the markets with real-time information coming in. As I said, it uh, combines various parameters, and it is the most real-time and up-to-date volume-based, aggressive volumes-based information that a trader can use. And again, killer trader momentum indicator is based on a few proprietary parameters that I have designed and developed with respect to momentum. For example, it simply tells me that when the bars are blue, there is momentum in the market. There is strength in the move that directional traders or option buyers can use. If the bar tips are red, then it simply implies that there is choppiness at that moment. And if at all someone is already in an open position, back to back six red bars implies a trader should get out. If you look at this, for example, on Friday, this is where a lot of choppiness was there. You can see the bar tips are red. During trending move, you can see that the bars are low. Again, this is a leading indicator, unlike other momentum indicators that shows what is happening and what is expected to happen. Again, during the entire down move, the bar tips are blue, and to the upside you see that here the bars are red. So to a large extent, intraday directional traders, option buyers especially, and even writers to a certain extent can make use of these tools which I provide to my students to help them stay on the right side of the market and know what to expect from a market move. Again, for example, lot of chop here. You can see how the bars are totally red. As I was telling, at open at this initial start of the session, I also have created something called as options imbalance range on near to the money, at the money, and uh, slightly out of the money option charts. That basically tells me where is aggressive writing happening, where exactly. Again, this is not related to highest open interest, but the key is aggressive writing, because in the short term, market moves are also controlled to a large extent by the options market players. This tool essentially helps me find those sweet locations where the most aggressive option writers are present on a particular day. For example, this is the location for 40 to 600 put options, most aggressive positions in an option strike being present. I rephrase. You see that we had an up move after that, so there was no reason for a trader to start selling 42,600 put. If we have a look at a call option, for example, say let's say 42,600 call option, you can see that this is where right at open, the opening tick itself, large positions are being built in this option strike, driving prices lower. So around this is where I look to take my option short positions, which essentially give me 2 hour to 3 hour. Again, each and every tool I have indicator I have developed serves a certain purpose. This is for me to trade in the options market, especially from Tuesdays towards expiry essentially. If you look at a couple more strikes, so say 42,300 put. Let's have a look at a few OTM puts if technically we got any trigger in OTM puts short side or what exactly happened here. Again, I use it on one strike at the money strikes and one strike below at the money. So this is where the largest and the aggressive positions in 42,200 put option was being built, and we saw an up move above that. So this is not a strike where a writer would ideally be sitting on the short side today. Ideally, I always wait for a break below the lower end of the imbalance range for me to start writing options. Each of these tools serve a particular purpose, and on a particular day, as an option writer, I have an added advantage if I uh, take position starting from Tuesday. Options imbalance range for is that, and delta bands is for analysis on futures, helping me to take intraday positions and overnight positions in the futures market, essentially. And momentum indicator is to help me understand what kind of momentum is coming into the markets. Right now, until a couple of weeks back, these indicators are only available for my students who take my mentorship program. I have introduced a short trial run, which almost 100, 120 people are participating. I've given access to the indicators for a couple of weeks on a trial basis. Soon, and this was a one-time trial, soon they will be opened on a subscription basis. Also, anyone who attends my mentoring program can avail the use of these indicators in Quantower. I hope this session was useful to all of you. I'll be sharing my Twitter and Telegram channel handle in the Quantower channel shortly. So please feel free to give any feedback that you have on the session, be it good or bad, always welcome. And if you have any further questions with respect to what was explained in this session, always feel free to reach out to me.
Okay, I think there are a couple of questions. So, Kanaya, can you take that?
Sure, sure, no worries.
Yeah, Kanaya, can you unmute and ask your question? Hello? Can you unmute, Kanaya? Okay, I think in the meantime, we'll ask Maxis. You can ask, unmute and ask a question.
Hello.
Yes,
Hello.
Maxis. Please tell me.
Yeah. Hello, Abhishek. Uh, on the delta band for today for buying Nifty, if you can come to that chart. So basically, the delta band is like a value area in real time of a certain look back period, calculating in real time. I believe that roughly sums up what it is.
It doesn't just talk about the value area. By value area only takes into consideration volumes, right? This doesn't just talk about the volumes, but the real time flow of it also matters to it. That is why you see that the band is not exactly symmetrical at every point of time. Sometimes you see it moving along with the price, sometimes you see it being extremely narrow, giving a lot of weightage to the current volume flow in particular.
Okay. So in that regard, if you see for Bank Nifty today, the delta band, say in the second half of the day, about 2 o'clock or something, it started to move up. Can you explain what that is?
Sure. Since you are part of the trial, right? I think I'll
Right.
I'll be sharing a separate video in some time with all of you in which I'll explain that.
Okay. Okay.
Okay.
Okay. Fair
So
enough.
it will take quite some time for me to explain, at least 5 to 10 minutes. Yeah.
I understand. Sure. Sure. Over to you.
Okay, I think there are no more questions. All these indicators are available in Quantower and exclusively on Quantower at this point of time. However, to learn more about these indicators, it is not simply plotting the indicators and taking decisions. You need to understand how those indicators can be used, and for that, Abhishek is there to help you out. And I think he's already started providing some kind of a basic training on those during the trial period. Is there any window available for those for trial to add up, or you already started, Abhishek?
The trial has already started from yesterday, to be precise. But in the
Okay.
future, we'll be giving one more round of trial. So anyone who has missed now can then join.
Okay. Okay. We'll do that. Okay. So thanks a lot for taking time for us and giving this valuable inputs to on volume analysis. For those who are new to Quantower, we have all these tools on volume analysis. We focus a lot on volume analysis, order flow, market profile. We have very good informative and useful tool called Option Surface if you are an option trader, as well as you can trade from the same platform. So that's an advantage that you have. You have one-click execution for all types of trades, and we cover the brokers like IIFL, Gill Broking, Composite Edge, and Nirmal Bang. And with these four brokers, you also get tick level historical data. And then we have support for trading through the platform for 5paisa as well as Fires, where they provide 1 minute at above historical data. And for some features, you may need third-party data feed like True Data Feed. And we also have now Kotak securities with True Data integration. So in the case of Kotak, we only have connected to live data, I mean live trading only. And for the data feed, you need True Data subscription. So if you have any questions, I already shared the Telegram link. So I shared all the links of Twitter, YouTube, Telegram. Support. We have two channels, one for support and one for information, and we also have a YouTube channel so that you can join there and watch lots of videos that you put out. And if you have any questions, we are there to help you through Telegram. Mostly we support through Telegram, so you can join our support chat. So thanks a lot for Abhishek once again, and thank you all for joining in for this webinar. And tomorrow we have webinar on order flow basics, and we have order flow on advanced order flow on Thursday. So do look for the link on our Telegram channel for this. Thanks a lot, and good night.